With me on the line now is Capital Network's Support Services Analyst, Ed Stacey, to talk through xfinity. Ed, good afternoon. Good to speak to you.
Hello, hi.
Ed, first off, tell me a little bit more about who they are and what they do.
So xfinity is a professional services company dealing with pension schemes. Their clients are corporates who have a pension scheme, and also importantly, it's the independent boards of trustees. Those boards tend to hire a consultant like xfinity to administer and run, on a professional basis, the scheme. So you have your sort of standard actuarial kind of valuation type services, your administrative services, making sure everybody's actually getting paid the right amounts. And then you have some more sort of complicated, high value added things, de-risking solutions and that sort of thing. That's also a big part of the business. Your peers are companies like Willis Towers Watson is one of the very big ones, or if you look down at things of similar size to xfinity, you've got things like Hymans Robertson or Punter Southall. xfinity is, if you look around for a listed pure play, you're hard pushed to find anything xfinity is as a pure play listed name. It's one of your only choices.
I think it'd be fair to say it's a market with reasonably low growth, but interestingly, they've identified a couple of key opportunities here, Ed.
Yeah, so you tend to think of this type of company as being, perhaps it's not going to be very high growth, but it has very high EBITDA margins, 30% plus, has 90% cash conversion, very high degree of recurring revenues. But as you say, you wouldn't normally expect then that you're looking at a high growth business. In fact, these guys do have some pretty dynamic growth opportunities. And I wanted to talk about market shares because we believe that xfinity is taking market share off of the big three. Those are Willis Towers Watson, Mercer and Aon Hewitt. Those three sort of stand at the top of the league in the UK pensions administering business. Reasons why would xfinity be taking market share? I think the cost of their offering is one thing, and it's partly just that xfinity has a lean cost base. They manage themselves very efficiently. But also, I think even more importantly, they offer a very tailored, bespoke solution for a client. It means the client doesn't end up paying for lots of bits of service that they didn't really need. So it's that having the very tailored service that means they can actually give a lower cost offering. And then, secondly, that tailored solution actually means often the clients are finding they're getting a better solution, better service for themselves. And that's partly, as I say, the tailoring and the bespoke nature of the service. It's also the technology platform that xfinity uses. And then what's brought this to the fore really in recent years, and I think this is the opportunity really that xfinity was quick to spot, a lot of these boards of trustees have started including, as one of their members, they will have a professional trustee. That's a person who actually makes his living just going around sitting on different boards of trustees and getting paid a retainer. Now, if you've got a person who sits on a dozen different pension boards, he will tend to notice if he says, look, I sit on company A and I sit on company B, and company B is using xfinity, we're paying half as much money and we're getting a better service. It's these professional trustees that have been sort of propagators for the message and started to get more boards of trustee to look at switching. So that's been the kind of change in the market that I think xfinity's been good at exploiting.
And they've also got an emerging product. Ed, what can you tell me about that?
Yeah, you're talking about National Pension Trust. Now, what that is, it's for defined contribution schemes. They had these rule changes in the UK in the last couple of years that the pension member, they can do, sort of lump sum drawdown on their pension and that sort of thing. This was George Osborne's reforms. And that's an administrative headache for whoever's administering that pension. So it makes companies move towards what's called a master trust. Master trusts existed before these pension changes, but they become even more attractive now because of those changes. People look at going into an umbrella fund, so it's all administered, multiple different pension schemes administered by one big umbrella fund. Now, the National Pension Trust is run by xfinity. It's a little ahead of most of the competitors. We've got some notes on this in our research report in terms of ticking all of the different boxes for regulatory approval and for having a full service offering. It's probably the most advanced product on the street. And that's why we think it's a small part of xfinity now, but it actually has the potential to really move the dial for them in terms of growth in the next few years.
So what type of investors do you reckon would be interested in xfinity?
Yeah, I mean, you're going to start by looking at dividend yield investors. This is a 3.5% dividend yield, so it's a decent yield. And if you look at actually who are the top investors, it's a bit of a who's who of the high quality yield investor funds. But I think apart from the fact it's a good safe dividend, it's this growth angle that differentiates it a bit, because the way we see it, we think you can get about 6% growth per year. That's actually what they have done over the last 3 years, by the way. When they report results in June, I think that they're a March year end. I think you'll see the latest year, there's not so much top line growth. It's more like a flattish year. Various reasons for that, which I think are well known to the market. But I still think the trend, 6% per year, you are going to see that pick up again going forward. Now what that means, you're getting a 3.5% dividend yield, but you're also getting potentially a 6% capital gain per year, all things being equal. So for a very safe, very low beta type investment, it's giving you a decent yield and pretty handy bit of growth as well.
Thanks very much, Ed. Ed Stacey there, Capital Network's Support Services Analyst, talking through xfinity.